Hello and welcome to Investing Confidential. Remember that scene in The Terminator many, many years ago? I'll be back. Well, that's what inflation was telling you 3 or 4 months ago. Nobody listened. Nobody listened. And the last week, people listening, except the market. S&P doesn't care. As I told you before, the S&P doesn't care. And I'm going to lay out why inflation is higher, why inflation will stay at these levels, what the effect's going to be, and what you should be doing. So here we go. So we saw the CPI this week, obviously hotter than expected. And then today came the PPI, Producer Price Index, right? This is the one that really is going to worry the Fed, along with wages. The Fed really watches the PPI and wages because this is what really is the underlying and could keep inflation rising higher, okay? And as you know, it's persistent. As it says here in this dumbass article here by CNBC, it's persistent, okay? And, all these people who said, the inflation, we're going to get the Fed cut, the market rally with the Fed cut. There's going to be no Fed cut, folks. Okay? And look here, you got import prices, and then you got import prices ex petroleum. So why is this important? So import prices, this is the stuff, again, we're a consumer-led economy. Our consumers are constantly being, and we've got to import tons of stuff. And as you saw back in late 2021, we had these problems with the supply chain, all that. We had huge price increases, and this is where inflation was really, really raging. And then fed into 2022, right? So it's a lag. So here we are. We've got this, the morons. And hey, by the way, the Bureau of Labor Statistics, they're the ones who are printing this information. And as I told you in the past, this information is completely manipulated, just like the job numbers and everything else. And it always skews positive, right? So this is an election year. Do you think they want inflation rising to the election? Of course not, but they have no choice. There's no choice. It doesn't matter what Wall Street wants. It doesn't matter what the White House wants. Inflation is raging. We have printed too much money. And if these idiots in Congress approve this spending package, $80, $90 billion, inflation is going to go higher, folks. It's the bottom line. These politicians don't care. They spend money like drunken sailors. They just don't care. And what you're seeing here in imports, it's going to continue. And God help us if the dollar weakens on back of higher inflation, then the inflation will even go higher. And this is why Mr. Powell, who I'm not a really big a fan of, he kind of held back. Not that he had this information, maybe he did, maybe he didn't, but it's obvious. And I showed the last video in the 70s what you had. You had this, this Fed chairman who had spiked inflation, could cut rates. Then inflation rose again. So the guy got fired. Remember, Powell is rich. Powell grew up rich, doesn't care about money. What he cares about is legacy only, even though he's in the pockets of private equity and venture capital and all these other clowns, okay? He cares about his legacy. So though he indicated he's going to cut rates, which is as good as cutting rates at this point, all right? I guarantee the next time he speaks, he's going to be very, very hawkish, okay? Because there will be no rate cuts, folks. There's not going to be any rate cuts coming up in the next few months. No chance. There is zero chance of any rate cuts, zero, unless we have some kind of crazy terrorist attack or whatever. There's zero chance. Because as you can see here, core, super core, this is really good information that they've stripped out a lot of nonsense from the Bureau of Labor Statistics, and they looked at the stuff that really matters. And at the end of the day, look at this spike. Every other pundit was calling for literally for rate cuts because inflation was tame. No, it's not. It's not. Okay, and as you can see here, it is not even near. And then you've got something that no one looks at, and I've told you before about this. Okay, the S&P 500 is everything. Everything. This is why S&P is not going down. You got 5 to 7 stocks that all you need is a few people to buy in this illiquid market, and then keep the market going up. But again, these people are fools. They're fools. Why? Because the S&P is contributing to inflation. As I told you before, it's contributing to inflation. It's a double-edged sword. You don't want the market to come down because the S&P is everything, right? S&P is everything is leveraged to the S&P, the economy, everything. And what these idiots don't understand is so is inflation. Okay, and you look at these numbers, and as I said, PPI component follows stocks with a 1 month lag. Okay, so stocks are rallying artificially now, folks. Remember, 7 stocks, that's it. And the prospects of rate cuts, which are not going to happen now. So we had a massive rally because of nothing, because of 7 companies that are now incredibly overvalued. And now inflation's spiking. So what are you going to do? What are you going to do? They can't let the market go down. Wall Street can't because they need IPOs. Without IPOs, they're dead. They're already dead. They're dead man walking anyway. So there's a dilemma, a big dilemma. Compounding, here's some results. Here's what's happening. So as you can see here, you've got a major issue in commercial real estate, folks. I don't care what people have said. It's a major problem. And we're just beginning to see it. And if rates continue to stay at these levels, which they will now because inflation is not tamed, there's no rate cuts, the problems that we have seen so far with these regional banks are going to continue. This is a huge problem, and we're just seeing it. Okay, remember, a lot of these companies that have leased all these commercial properties, okay, leased all these floors and offices. As these leases come due, they're not renewing. These real estate commercial properties are gone based on what people are willing to pay or not pay. It's all about cash flow, right? So if you rent a property and someone's paying $10,000 a month, and then when it comes due and they say, no, I'll pay you $3,000 or $2,000 or nothing, you'll take three or four, $2,000. Now, the banks who have massive loans, you go to the bank and you say, listen, I can't pay this loan anymore. You got to write it off. But we'll pay you this. And the banks are going to write, and many of these banks are going to go up. And I said before, it's not going to be the big banks. They're indirectly. But the result of this is inflationary because you're going to have a very small number of banks. We're going to become like Brazil. We're going to become like Singapore, where you got a very small number of banks control everything. That's what most of the world's like outside of the US. And the powers that be, the big banks, the Wall Street, they don't care. And it's very inflationary. Okay, and then another thing. Okay, so we got problems in commercial real estate with rates continue higher. And then we've got, folks, this whole scam with jobs is absolutely, positively going to explode in everyone's face. Jobless claims are about to explode. Why? Because all these jobs that were created, let's say just in 2023, this massive amounts of jobs, they were fake jobs. They were part-time jobs. Full-time jobs are going down. Every day, you saw Cisco today, every day the tech big companies are laying off thousands of people. Not hundreds, thousands. Nobody's talking about it. From Google, Apple, that's right, Apple. Cisco, Bank of America, Citibank, Morgan Stanley, Goldman Sachs, they're all laying off tons of people. Financial, technology, these are high-paying jobs. This is going to have a major effect on the economy and the job numbers. Massive. And we're already seeing it, because guess what else came out? Retail sales. It was a complete disaster because the expectations were significantly higher. Okay? And so you look at these retail sales numbers, you look at inflation. So we've got prices going up, no one's buying. Okay? And as I showed this chart, I'm going to show it again. Major companies, CFOs during their earnings calls talked about weak demand. Folks, this is recession. No matter how you slice it, it's recession. And there's nothing anyone can do. Okay? And you've got, look, and here's how people were positioned. All these bond gurus, they were bullish. They were long the 10-year, looking for rates to come down. Well, guess what? They're getting destroyed right now. Not a lot of them are selling, but they're getting destroyed right now. And by the way, when it all comes down to it, inflation is not going down, folks. Because I said this before, gasoline, WTI, Brent is starting to go up. It's breaking out. If you haven't looked at it, Brent and WTI is breaking out, and so are gasoline. Gasoline where I live today, from a week and a half ago, is up 10%. Gasoline at the pump, 10%. In fact, I'm curious. If you decide, please comment. I'd like to hear what everyone says. And whoever's listening, the 5 people listening, I don't care if it's 5 or 6, let me know what gasoline prices have been up in the last week. Because if you filled your tank up a week and a half ago, you're looking at it today, where I am, it's up 10%. And that feeds right into inflation. It's unbelievable. And then here, again, dangerous. The S&P, I'm not going to mention too much about stocks, but here, I mean, I've shown this before, the top 10%. This is a market that is so unhealthy. We're basically all-time highs going back to the 20s, folks. This is the 1927 crash. This is what this was the catalyst for the 27 crash. We had a small number of stocks driving everything up. Now we have 7 stocks, not even 10, but 7 stocks, taking the market to the most ridiculous levels we've ever seen it in history, going back to the 27 crash. And then we got valuations. And look at the US. It is absolutely, it's getting worse. So the blue is the range, little orange diamond is where the markets are currently. Okay, look at the US. I mean, you want to talk about overvalued? It's gone. You can't even measure it anymore. That's how overvalued the US market is. So, and right now, but as I said before, the S&P is not going down. It's not going down. Would I sell today? No. Tomorrow, maybe. Not today. Would I buy stocks today? Not with your money. Not with your money, because guess what? Many of you haven't seen it before, but I've seen it before. I've seen this before. The next video I'm going to talk about is what no one's talking about, is what a bear market looks like. Okay? So stocks are overvalued. Inflation isn't going away. Inflation is back with a vengeance. No matter what these pundits say, no rate cuts. So if you're an investor, be careful out there.